You are watching the news about Operation Epic Fury in the Middle East, but the Iran war butterfly effect is happening right now. And if you think the Strait of Hormuz blockade only affects the price of a barrel of oil, you need to look at your mortgage and your credit cards immediately. Welcome back to the debt algorithm. In our last episode, we established the sheer mathematical terror of 20% of the global oil supply vanishing overnight. But today, we need to talk about the second wave, the invisible tsunami heading straight for your household budget. Macroeconomics can feel like a foreign language, so let us translate it to your kitchen table. How does a military conflict an ocean away translate to you paying hundreds of dollars more on your minimum credit card payments? What is the actual mechanism at play here? Let me explain. When the cost of diesel fuel skyrockets because of an energy shock, every single truck delivering groceries to your local supermarket has to pay more to run. The cost of logistics multiplies exponentially. Official inflation data might say prices are up a few percent. Actually, wait, if you look at the real-time food and energy inflation happening right now since the blockade, the picture is much, much worse. When I read the latest reports from the Dallas Fed, honestly, I felt the urge to check my own wallet. The cost of everything you touch is going up. This creates a biological panic response in the brain. We call it scarcity brain. When your grocery bill doubles, your brain deprioritizes long-term wealth and focuses entirely on short-term survival. So you put the groceries on a credit card expecting to pay it off next month. But next month, the prices at the pump are even higher. This is exactly what the debt algorithm feeds on. Here is the brutal truth. The Federal Reserve does not care about your credit card balance. To fight this new wave of structural inflation caused by the Iran war, they're forced to keep interest rates punishingly high. They might even be forced to raise them again. And when the federal funds rate stays high, your credit card annual percentage rate climbs to 25 or even 30%. Suddenly, you're paying $300 a month just in interest. Your principal never goes down. And if you're trying to buy a house or refinance your mortgage right now, you're looking at borrowing costs that will crush an average income. A standard home with an 8% mortgage completely vaporizes a family budget. Why is this happening? Because global bond markets are terrified of the inflation spilling out of the Strait of Hormuz. So what do you do when the system is mathematically rigged against your cash flow? You stop playing their game. You have to understand that every time you swipe that card to fill up a gas canister, you're financing an international energy crisis at 28% interest. You're letting global geopolitics dictate your family wealth. When we look at the data showing oil potentially staying above $120 a barrel for months, we realize this is not a temporary blip. This is a permanent reset of household economics.
Think about what happens when you try to maintain your 2024 lifestyle in a 2026 economy. Your brain is desperately trying to normalize the abnormal. Behavioral economists call this lifestyle anchoring. You remember what a gallon of milk or a tank of gas used to cost, and your brain assumes the current price spike is temporary, so you bridge the gap with credit. But the Strait of Hormuz is not reopening anytime soon. The supply chain data from automotive logistics and the Energy Information Administration forecasts show us that this energy shock is structurally embedded into the cost of delivering every single product to your door. When I looked at the latest household debt data from the New York Fed, I had to read the report twice. Early delinquencies for credit cards are surging. The average household is carrying over $6,000 in revolving debt. Actually, wait, if you add in the hidden buy now, pay later loans, that number is closer to $8,000 or $9,000. How are you supposed to pay that down when your utility bill just went up by 40%? This is the butterfly effect in action. A drone strike in the Middle East forces your local power company to pay more for natural gas, which means they raise your rates, which means you have less cash to pay your credit card bill, which means the bank charges you a late fee and spikes your interest rate. This is how the debt algorithm traps you. It uses global macro instability to drain your microeconomy. Carrying credit card debt right now is like trying to bail out a sinking boat with a leaking bucket while the bank charges you a monthly fee to use the bucket. It is mathematical suicide. Your biological instinct when faced with overwhelming debt during a crisis is to freeze. The amygdala, the fear center of your brain, takes over, and you start ignoring the mail. You stop looking at your banking app. You just pay the minimums and hope the Iran war ends tomorrow. But hope is not a financial strategy. The Federal Reserve cannot rescue you. Their mandate is to crush inflation by slowing down the economy, and they will willingly sacrifice your household cash flow to achieve that macro goal. You must become hyper-aware of your personal balance sheet. Every dollar going out to service high-interest debt is a dollar that cannot be used to stockpile food, secure emergency energy, or build a liquid cash buffer. Scarcity brain wants you to focus on surviving until next Friday, but survival in the invisible tsunami requires you to look at the math ruthlessly.
So, how do you fight back against a macroeconomic tsunami? You start by plugging the holes in your own boat. Right now, you need to look at your credit card statements and find the annual percentage rate. If you have multiple cards, you must attack the one with the highest interest rate first. We call this the debt avalanche strategy. Actually, wait. Before you even do that, you should look into a 0% balance transfer card or a fixed-rate consolidation loan. When I checked the personal loan rates yesterday compared to current credit card rates, it was, wow. It is almost criminal what the credit card companies are getting away with during this crisis. Moving a 29% interest debt to a 12% fixed loan can save you hundreds of dollars a month. That is hundreds of dollars you can use to buy extra groceries or fill an emergency gas canister. But let me be very clear. Consolidating your debt only works if you completely change your behavior. If you move your balances to a new loan and then keep using the old credit cards to bridge the gap in your budget, you will drown twice as fast. You have to treat your household balance sheet like a fortified bunker. The Strait of Hormuz blockade is not just a news headline, it is a direct tax on everything that moves. Think about it. Modern agriculture relies entirely on diesel and fertilizer. Both of those are tied directly to global energy markets. When a farmer pays double to run their tractor, that cost gets passed to the processing plant, which passes it to the trucking company, which passes it to the supermarket, which passes it directly to your credit card. Are you starting to see how the system is interconnected? It is a giant loop designed to extract wealth from the unprepared. When you carry high-interest debt right now, you are essentially paying a penalty fee for inflation you did not create. You are subsidizing the banks while your own purchasing power melts away. And honestly, it makes me angry when I see hardworking families getting crushed by this silent math. This is why I'm telling you to act today. Your bank wants you to feel overwhelmed, so you just pay the minimums forever. Do not let them win. Sit down at your kitchen table tonight with a piece of paper and write down exactly what you owe. Face the numbers. Once you see the math, the biological fear starts to fade and the logical strategy takes over. But getting your debt under control is only step one of your survival plan. Because while the Federal Reserve is squeezing your credit, the Iran war is actively breaking the physical supply lines that bring food and medicine to your local stores. Shipping insurance rates for cargo vessels have skyrocketed by 500%. That cost is about to hit the shelves in a matter of weeks. You need to know exactly what to stockpile before the panic buying begins. Click the video on your screen right now to understand the supply chain collapse and what you must secure for your family today. I will see you there. Stay rational. Stay prepared.